us on 0798 404188 or 0713 958808 or 0797 549710. You can also email us on nakibenterprises@yahoo.com. Nakib Enterprises Limited, for all your motor vehicle needs.
Good evening and welcome to EBN TV. This is the Spheres of Life and I'm your host Jeff Kimayo. And for the adverts that you've seen, if you need any kind or any luxurious car of your choice, you may reach out to the contacts that are shown from the advert or on the advert that you've just seen. And on the Spheres of Life, we make sure that we ensure there's transparency, there is accountability, and there is sanity in every story that we're making here tonight. We have a great guest on board, and before we enter there, our topic tonight is understanding the dynamics of insurance, and this is part 2 of the same. Welcome to the Spheres of Life.
Good evening, my dear viewer. My name is Caroline Muthoni, and as always here at Spheres of Life, we bring you a show to make sure that you understand things and your point of understanding is well taken care of. So today we are tackling understanding the dynamics of insurance with our guest Joyce. We had her on another session last time, so if you want to follow up on part 1 of it, you can go to our social media platforms. That's on YouTube, TLP TV, and on Facebook and Instagram, Jeff Somba the Legend. So if you have any questions still, you can still ask on those social media platforms that I've just shared. So welcome, stay tuned, grab your favorite snack because you're about to stay informed. And as I always say, stay tuned to stay informed. My name is Caroline Muthoni.
Okay, that's great. And now I think from the advert, I think you're the one who made the voiceover of the same.
Yes, I did.
So if you need a Mercedes-Benz from the same showroom, if you need a Land Cruiser V8, if you need a CX-5, if you need a Probox, if you need a Toyota Ias, if you need any kind of your car, you can pick it from that showroom.
Nakib Enterprise Limited. Yeah, and if our viewer has a business that they would like to advertise, you can advertise on us, Spheres of Life, and we'll tell the world of what your business does.
Okay, we are boarding up into our business, and this is a serious business that we're starting off. And tonight we have a great guest who is with us. Welcome to EBN TV.
Thank you so much, Jeff, for having me again. It's my pleasure to be here. Okay,
that's great. And you can just have a brief introduction of yourself, because I think many and few maybe did not get you last time when you were here.
All right. My name is Joyce Kamau, and I do insurance. And when we talk of insurance, we do all types of insurance. And I do also personal financial consultations in case one needs to know about finances. We also do that. So Joyce Kamau, and I sell insurance for all our underwriters in the country.
Okay, where can someone get you if they wish to?
If someone would wish to get me, you can get me on my phone, and my phone number is 0726 361 842. You can also get me on my social media, on Facebook as Joyce Kamau, and on Instagram at Shiko Kamau, and also on I'm old. TikTok. I'm getting at TikTok at Joyce Kamau. And I guess
Okay, I think for the contacts you can just have a repeat of the same, because maybe there's someone who's always not grabbed the same.
Okay, 0726 361 842. And for those who use Airtel, I also have a number on Airtel, 0785 648 728.
Okay. Now, giving an opener to the same, what is insurance?
Okay, insurance, we can do a recap of what we said insurance is. When we talk of insurance, we are talking about transferring a risk. All of us, we said, all of us carry a risk. And the risk that we carry is that maybe anything can happen to me, and which can lead to a loss. And that loss can be a loss of life, can be loss of property, can be loss of finances, and that is why we transfer that risk. And when we transfer that risk, we transfer it to an insurance company, so that in case of that loss, in case I lose anything financially, in case I lose my life, in case I lose my ability to perform what I usually do as work that brings some food, that brings bread on my table, then the insurance is supposed to take care of me. So that is what we call that is all about insurance, transferring a risk to another party to take care of that risk.
Maybe you could give us a briefing on the types of insurance we talked of, so as we continue they may get to understand.
Okay, thank you. I know we might have some viewers who are starting with us for the first time, and the types of insurance that we usually have, we have general insurance. That is where we take care of non-life insurance, non-human life insurance. That is whereby we insure maybe livestock like poultry, we insure pigs, we insure dairy cows, we insure cows that are sold for meat. That is for commercial purposes. When we have livestock that we do for commercial purposes, we can insure them, because in case we lose them, we lose financially. That is on part of general. We also have on general, we have car insurances, we insure our buildings, we insure our cars, whereby we have consumed money to make this asset. Therefore, we insure those assets under general. When it comes to life insurance, we talk about education policies, we talk about life insurance, whereby in case if I lose my life, my beneficiaries, they are paid some money, and that is under life insurance. We also have retirement that is also based in life insurance. We also have annuities, we also have retirement plans, we also have pensions. Those are all under life insurance. Then we have another part of insurance that usually does not basically deal with the risk, but it deals with the investments. And this one we call it asset management. When we talk of asset management, it's whereby I give an institution some money, they invest the money for me, and then in return, they give me an interest. That is where we talk of money working for me. They do the investment, they do all the work, and then by the end of the month, by the end of the year, by the end of the quarter, then they pay me an interest on my money that I've invested in them. All this is found in the field of insurance companies.
Okay. And sometimes I think we've covered, two different types of insurances, and I think one is the general and the life insurance. And life insurance, there is the education cover, or in education policy, something of such a sort. I think you can expound a bit on the same. Because I think education is one of the basic needs, or even needs of a generation. I don't have to say children, but of a generation. And maybe some people are lacking, and they may just wish to know, may insurance, when it comes to education, help me in one way or the other? Yes.
Okay, thank you so much, Jeff, for that question. When it comes to life insurance, and basically when we are talking about an education policy, this is whereby a person who's the guardian or the person that the child is depending on for education decides to start saving something for the benefit of that child. And most of the time we usually advise, once a child is born, they should have an education policy, because once a child is born, it means that this child, in a duration for some years to come, that child will be going to school. And once we start saving slowly by slowly, and then by the time this child is getting to senior high school, and also in university, we'll be able to have saved enough money to save for this child, to educate this child. And most of the time people ask, why don't I just go and open a bank account and start saving for my child? And what I tell them, as much as we can do that, that is very good, because it's a form of saving. But the thing is, when it comes to insurance, there's something that we give an additional benefit. And the first thing that we we give is usually the discipline. Because once you're saving with an insurance company, you cannot be able to access this money any other time that you want to access the money. If at all this money is supposed to be meant for a child's education, you're supposed to save for the next 6 years, you're going to save for the next 6 years, and by the end of the 6th year, that is the time you'll get to access this money. Therefore, it gives you that discipline. Number 2 thing that an education policy gives you, I being the guardian of my child, I being the parent of my child is depending on my income to get that education. It means if at all my income maybe is cut off, or maybe something happens to me and I'm not able to perform my daily duties, therefore to get that income, it means the education of my child will be cut off. Then what happens with an insurance company? Whenever I start saving for my child, then the insurance company gives me a life cover, in that in case I get anything, maybe an accident, or maybe I just pass on, I can sleep and die, maybe I can get an accident, I die, then what happens to the education of my children? I know most of us, we have seen, and all of us, I know we have experienced that, whereby a loved one is, we lose a loved one, and then the education of the children becomes something else. So in case of death of the parent, of the policy holder, the company compensates that family, and they make sure that by the time that child is supposed to go to school, school fees is well paid. And then in case maybe I get disabled, the school fees is well catered for. And also sometimes I might get an accident and not do anything. Maybe I lose maybe my hand. Insurance still takes care of me. It also takes care of the medical bills. So it means it covers the life of that particular person. Therefore, we say an education policy has a life cover. Then the third thing that this cover gives us, back in the year 2003, when Kibaki came into power, what he did, he discouraged harambes, he discouraged fundraisings, because you could find a parent, I've gotten a child, all the 14 years, until the 14th year, this is when the parent comes and tells the society, my child went to school, they performed well, and since a child is a child comes from a society, so the society owns this child. So let's come together and raise funds. But a child is not an emergency. We have gotten this child from year 1 all the way to the 14th year. And we knew that this child will need school fees. So what Kibaki did after he discouraged all those things, he put in something that we call an incentive. And this incentive is a tax relief benefit, whereby 15% of the amount that a person is paying for a child's education policy, it comes back as a tax relief benefit. All the insurance company usually give a certificate to certify that this is someone who has an education policy for their child, and or maybe for a child they are taking care of, and then that person is given a 15% relief. So it encourages people to save more for their education policies for their kids, and also for other investments when it comes to life insurance.
So Joyce, you've talked about educational policy having a life insurance in it. So does it cover the insured now, who is the student, or does it cover the insurer who has insured the kid?
Okay, in this case, in fact, the insured is the person who's saving. The insurer is the insurance company. Yeah, what an education does, it covers that person who's earning the income for the benefit of the child. What we usually say, we say, I as a parent do not depend on my child in terms of finances, but my child depends on me in terms of finances. Therefore, the child has insurable interest on my life, in that my earnings is what caters for the child's needs. If I lose my child, I don't lose financially, but if my child loses me, they lose financially. So I'm the one who's usually insured.
Okay. And does this what happens if the insured person is normal? For example, maybe the kid dies, the funds transferred to another insurance, or what happens?
Okay, if the child dies, we usually give back to the customer all the money that they have saved, or else they can nominate another child to be the one who's covered for that insurance. Yeah.
Okay. And I think again from the life insurance, we also have got investments. I think you're turning out to be like banks. You're giving loans also.
Yeah, sure.
Okay.
Actually, when it comes to all these policies, like the ones that we do for investments, we have investments whereby a client might decide, I want to save for the next 20 years. In these 20 years, they'll just be investing money, and then by the end of the 20 years, we pay all the money that the customer has invested, plus all the accrued bonuses. But in case there's maybe something has come up, you really need money urgently, we always give a loan. And the loans that we give after 3 years. It means after 3 years, this policy has acquired something that we call a cash value. Therefore, we can be able to loan the person, and then they return the money with around 15% interest. But the best thing about these loans that we give you, it does not require you to have a guarantor, because your policy is the one that guarantees you for that particular loan. Yes, and you can pay to with a maximum of 36 months. But maybe to differentiate, with the loan that we give, we don't give like the ones that one gets from the circles. Actually, we give a percentage of the money that you have saved with us. Maybe we around 75 to 85% is the money that we can be able to loan you. Reason being, we want the customer to remember that the purpose of this policy is not for you to maybe taking a loan. It is for another investment, or maybe a goal that you have and you want to achieve within a duration of time.
Okay, and sometimes when you're walking along streets and you find that people sometimes don't believe in insurance, and there are some propagandas about insurance. Any have you heard?
Yeah, sure. Actually, when we are selling insurance, we get those challenges, and most of the time, in the earlier days, we didn't have a regulator, but right now we have a regulator who's IRA, Insurance Regulatory Authority, whereby they are really taking care of the customer and the needs of the client, making sure that any customer is well sorted, and the insurance company and also the agents, they are not defrauding the customers of their money. And most of the time, what used to happen in the earlier days, agents used to collect money from customers, and sometimes they don't remit to the insurance company. And therefore, by the time the maturity is getting of a policy has come, then the customer is not paid. Why? Because the company did not receive the premiums. But you see, it was not an error from the company side. It was an error, an issue with the agent who never remitted the money. But what most insurance companies are doing currently, they are not receiving cash payments. Most of the time they receive money on M-Pesa, and also our agents, we are all regulated. Also, we must have a license for us to transact any business with any insurance company. There's no insurance company that is going to contract me without the license. And in case of fraud, then my license can be cancelled, and I'm not able to transact any business in the country. Then the other thing that maybe leads to most people being afraid to take insurance, it's because the products that were there, mostly because of there was no much competition, and then the products are used, maybe the customer would end up paying more than they have paid with the insurance company. But right now, with the regulator, our rates are usually checked before we roll out any product from any company. The regulator checks on all the rates and makes sure that the customer gets the best benefit for the value of their money. Therefore, insurance currently, it's good, and we are performing well, and people are now more enlightened, and they have the knowledge. Because the other thing that makes people not partake insurance, it's because they don't have the knowledge. They don't know that insurance is a necessity, and it is not a want. It is a need, and everyone needs insurance. Everyone needs to be insured. Yeah.
Okay. So there are those people you say that they don't like insurance, or even they don't understand. I want you to convince them and let them know the importance and the vitality of them being insured, or even insuring anything of their own.
Okay. Thank you. Most of the time, I know there are some people who feel insurance people, they are con men.
Yeah, yes.
And they even tell you right on the face, and they will tell you, you know, insurance, they are con men. And what I usually tell them, I know there are even teachers who rape kids, isn't it? Can we say all teachers are rapists?
No.
We can't, right?
Yeah, you can't.
So it means not all insurance agents are bad, isn't it? The same way that you'll find there's one child who's better than the other. We don't say that this other child is as bad as that one child. And the most important thing about taking an insurance is that whenever anyone who has an income, that income needs protection. When we talk about finances, we talk about 3 pillars. I know the last time I touched on the same, and I'll also touch on the same today. One pillar of finances is where it is the accumulation of finances. Then after accumulating those funds, then we need to protect that income. And then that thing that we need to do is to distribute that income. When it comes to accumulating, that is the reason as to why each of us go out to make sure that we get a living. A living not for me as Joyce alone, because I also have people who depend on that income. And sometimes you might feel, I as Joyce, I am married. So it is the duty of my spouse maybe to cater for 1 to 3 things. But even if I don't pay school fees for that child that I have, it means I get an income from where I am working. Therefore, this comes even to the single people who feel I'm too young, I don't need insurance. You as a young person, you don't use your income all by yourself. Maybe your mom might call you from home and tell you, maybe Carol, I need this, I need that. What would you tell your mom? You'll give whatever she needs, isn't it? Therefore, if we were to lose that single person, then there's someone who's going to lose financially. Loss of that person means a loss financially to that other person who depends on that income. That is the first thing that we need to understand. When we are taking life insurance, we are trying to protect that income. And how are we protecting that income? Whenever I have life insurance, it means that the insurance company is going to pay my beneficiary a some amount of money in case of my loss. Therefore, it caters in case of loss of life. It also caters in case of loss of ability, that in case of disability. It also covers critical illnesses, whereby right now we are getting so many people getting their illnesses like cancer, stroke, renal failure, coronary surgery, heart attack, even the young people. In the earlier days, we used to feel like these illnesses are for old people. But right now, even very young children, they are getting such illnesses. Therefore, it also caters for such illnesses because we give a cover on such illnesses. Therefore, all of us. And then the other thing, and the most important thing, is that the discipline that we usually have when it comes to savings, it is not a very good one. Most of us are not disciplined when it comes to savings. And the best thing about insurance, we know once I commit this amount of money, even if it's 3,000, even if it's 20,000, that money I'll be saving each and every month. If I don't save this month, it means I have a debt. So next month I'll save for 2 months because it's like I will take it like a house rent, whereby I must pay that rent, whether the month was good, whether the month was bad. Because especially those people who have kids, I always tell people, when you have a child who's growing, whether you save or you don't save, that child will always depend on you.
True.
By the time they are getting to where they need the money, they'll not go get another parent. You're still the parent who will take care of that school fees. Therefore, that is the other thing that anyone needs to save, because we have those goals, we have those risks that we are carrying with us, and we need to take care of ourselves. Yes.
Okay. And life insurance, there is asset management. Someone may ask, what is asset management?
Okay, when we come to asset management, that is totally different from life. Because when we come to asset management, it's pure investment, whereby I need to invest my money. I give a lump sum, I give my 1 million that is somewhere lying, and then I give it to the insurance company, and then after a month, they give me an interest on top of that money, and then they compound it depending on how long I want to have the money with them. Sometimes what I talk about when I talk of money market, there are sometimes that you might even take a loan. Maybe you want to do a project, and maybe that project takes longer than you thought. And that money, you already have the money. What I advise people, put it in money market. It will be earning you something before you get money. Because what we use money market for, it's a safe net. Whereby this money, I can be able to access it in a day or two. And then I can be able to attend to whatever it is that I wanted to attend. Most of the time, you'll find people who have maybe a lot of money lying for maybe over a year, and it's just lying somewhere. I know there are even those people who put money under the mattress. Which is not bad, because if you feel it's safer there, well and good. But it's why don't you make your money work for you? Put that money in money market. It gets you a good interest of above 10%, 15, 13, depending on the organization that you're working with, and then you set. And that money is safe, no risk. Because money market is a low risk and low return. Therefore, you get you can never lose your principal, and then you set, and you're good to go.
Okay. When you mention principal, how much money can someone start as the principal amount?
Okay, we usually have as low as 5,000. That is the minimum that you can start investing in money market. And a top up, you can top up from 1,000 shillings.
Okay, so how does it grow from 5,000 to maybe an expectation of like 100,000? And how long does it take? What are the procedures that it should follow so that it earns, or even it earns the 100,000 point?
Okay, what usually happens, you see with the rates that we have, currently the rates that most companies are having are above 10%. So you'll find maybe it's growing by 11%, 13%, 15%. Therefore, depending on the principle that someone has put, if at all I put, like today I put 100,000 in my money market, then by the end of that particular month, it will have earned maybe 1,300. And then the following month, as we start the following month, the opening balance will be 100,000 plus that 1,000. And then the next month, it will be 1,000, 100 and 1,000 plus now that current month, because it's usually compounded depending on how long this person is going to invest. And then you see with the interest that we have, it is not one interest. It is not one constant interest. Sometimes it might go up, and currently most of the time money market is performing so well currently. It has been on the upward trend for the last, I guess, for the whole of this year. So you might not say, I cannot use the simple interest. I say that it's that 100,000 and then I multiply by the 13% or the 10%. No, because it's compounded. Therefore, one, depending on the need that someone has, someone can talk to us and then we do a quotation and then they can see where they want to get by the end of maybe a year or so.
Okay.
So by any chance, can you, is there a chance where you can't get profit, any percentage profit from the money market?
No. You'll always get an interest because even the lowest that has been there with the institutions that I'm dealing with, it has been around 8% interest. Yeah.
Okay, that's great. And I think up to that point, we are having a short commercial break. We are coming back to you right away.
Do you need a motor vehicle of your choice? Find no other. Nakib Enterprises Limited is your destination. It's located along Gong Road, opposite Jamuhuri Showground, next to Toyota Kenya Company, before Rescos. For more information, you can contact us on 0798 404188 or 0713 958808 or 0797 549710. You can also email us on nakibenterprises@yahoo.com. Nakib Enterprises Limited, for all your motor vehicle needs.
Welcome back to EBN TV. This is the Spheres of Life. Tonight's topic is understanding the dynamics of insurance. So I think we're up to equity fund. Someone may also need to know what equity fund may mean and what is the purpose of it and the importance of it in life. And if it comes to maybe, should I invest in equity fund or so? I think you just expound a bit on the same.
Okay, thank you so much. When we talk of equity fund, maybe I can go a little bit back, whereby when we talk of money market, equity fund, balanced fund, fixed funds, all those we call them unit trusts. They are vehicles of investing money, but it's a diversified way of investing. It depends with the risk appetite of the person who's partaking in any of the product. Because when we talk of equity fund, balanced fund, and fixed fund, these are some of the funds that usually invest in shares. Others we invest in offshore investment, and others we invest in bill bonds. Others we invest in treasury bills, and some of them have a risk capacity, whereby once you take any of these funds, we start at a negative, because first we shall charge the registration. We call it we charge registration fees, administration fees. So you start at a negative, maybe, and the charge, but it is not that much. It is between 0.5 and below, depending on the fund that we have taken, and depending on the risk that we have taken. And then these funds, they are not short term. You have to invest for more than a year, more than 2 years, more than 3 years, others 5 years and above. And the risk is a bit high, but they are very different from money market. For money market, I can invest as low as 2 weeks, whereby I invest the money. In 2 weeks' time, I can recall my money and attend to whatever I want to attend to. But these others, you have to first, maybe you'll be charged that registration fee. So by the first month, you will not have broken even. Maybe you'll break even by maybe the third month or the fourth month. And then the best thing about it, once you start growing, you just grow.
Yeah.
But also there's that risk because it's high return, high risk. Therefore, you might lose your principal. As Carol had asked about money market. Yeah, but with money market, you can never lose your principal. We always say it's a low risk, low return because your capital is always guaranteed. You can never lose on your principal. So it depends with the risk appetite. How well are you okay to handle any risk?
Okay.
Yeah.
And when it comes to, I think we are through with that, and sometimes we look at the climate change and sustainability. There are some tasks connected with the climate change and sustainability. How is the insurance sector taking charge or even taking part in that?
When it comes to that, actually last week, we launched the sustainability. English is not my mouth. Yeah, sure. We launched it, and what we want to do, we want to go globally so that we can be involved also in the well-being and the welfares of our society at large. Because what we are looking at. What we are looking at is making sure that we are also involved because as financial institutions, when we talk of industries, when we talk of insurance, we are talking about being financial institutions that are helping even in the growing of our economy. Therefore, all of us, we want to be part and parcel of whatever that is happening. And most of the time you find we are finding ourselves sponsoring and also assisting in these many areas that are coming up. And also when it comes to issues with the climate change, we are also doing a lot of education to educate people on better ways, environment. Yeah.
Which is that better way of people taking care of the environment? Which actually you educate people on?
Okay. You see, most of the organizations, especially the ones that are dealing with insurance, they do a lot of cooperatives work, whereby we also get involved in Ushirika days. When it comes like Ushirika Day, it's all about tree planting and also going out and educating people about the importance of trees and also importance of taking care of their lives. Also, we do matters to do with education on insurance, whereby we want to educate people how should people be when they are outside there. If at all it's driving their cars, we are taking care of, we are doing a lot of education on all matters that affect the life of a human being. Even when it comes to childhood developments, we are doing a lot of education in matters to do with schools, matters to do with churches, matters to do with higher education. We are doing a lot of that so that all the people can understand what is the importance of this. Because you see, as I said earlier, we are also insuring general. We have general insurance. And when it comes to general insurance, when we insure like something like crops, we also insure in case of drought. So you see, drought is also a risk to an insurance company because if there's drought, then the insurance company is supposed to pay the farmers who are expecting to get a return from the crops that they had planted.
Okay. Do you involve yourself in CSR activities in the community?
What is CSR?
Actually, it's like community social responsibilities. Like we find you may get yourself into the student homes and even paying fees for people, or even collecting garbage from rivers or another place, maybe dumped carelessly. Okay,
what usually happen? There are many. Without naming maybe an insurance company, a particular one, and a particular underwriter, we usually have insurances which have foundations. They pay school fees for some children, whereby after they declare the profits, their children that they take care of. That is one area that we do. And also the tree planting is another avenue of the social responsibility that we take off. And I guess those are the two major ones that also I personally have been involved in. And we also visit families for orphaned kids, kids who have those special children, we also visit them a lot. Yeah.
Okay, and in any sector, in any development or even investment, you find that there is the need to grow. Where do you see insurance after the propaganda, after the lies, after the kind of conmanship with insurance? Where do you see insurance in 4 years from now?
Insurance is really, we are doing so well. And
if you see it so far, why?
So far, insurance, it's not where we were. I joined insurance in the last 10 to 12 years, I guess. 12 years I've been in insurance. And if I were to look from where we've come from and where we are and where we are heading, we are getting better by day. Reason being, the first thing is people are more knowledgeable. And also our agents, we are more trained and we know better. And also, having been in insurance for long, you understand what are the main benefits. And we have seen ourselves paying claims. We have seen ourselves helping our customers. And we've seen ourselves growing and getting better by day. Therefore, insurance is really doing well. And in the next 4 years, 5 years, we'll have many insurances are performing better, more informed people in our society, especially because like Kenya, maybe I can talk about Kenya. The insurance, the people who have partaken in insurance is a very small number, less than 10% of insurance partaking in Kenya and penetration. But in the next, with a lot of knowledge, because I've seen even in IRA, they have been advertising a lot, even on social media. They've been talking about the importance of insurance, and people are now gaining confidence. They are gaining confidence, and they are also gaining the knowledge, because we say knowledge is power, and when people are empowered, then they can be able to make informed decisions. And I see in the next 4 years, I think insurance will be the thing. It will be a household thing in our country.
Okay, what's the impact of AI in insurance? A short one. Artificial intelligence.
Artificial intelligence. Yes. Jeff, you know I'm an insurance agent. No.
Okay, that I put on store. I think I'll be giving the question back to you another time. I think you just have to research on the same, because I think with artificial intelligence, I think there is an impact and I kind of negative effect to insurance, but you shall research for yourself and just let us know about the same. Now, because of time, I think we shall be ending there, but I just give you a short time for you to give your final word and maybe say hi to 2 to 3 people.
And maybe before you start, what will make a customer go to Joyce Company for insurance and leave another? Okay.
Thank you for this opportunity. I think this is where I make money, right? Okay, on a light note, thank you so much. What I would want to say is I would really want to appreciate the fact that you've given me this opportunity, because most of the time what we say, when people are not empowered, therefore they can't be able to make decisions and they can't be able to make better decisions. But with more knowledge on such matters as insurance, therefore we'll be able to reach more people, and most people will be able to understand what insurance is all about, and they'll be able to partake of the products that the insurance companies are selling. And maybe to talk about what Carol has said, once you come to me as your insurance agent, I'll give you good services, because what I know is that what a customer needs is to have constant contact and constant information from their person. Therefore, in case when a customer has a claim, they can be able to get assisted within the shortest time possible, and that one is guaranteed. When you come to me for insurance, be assured that all your insurance needs will be catered for. And whenever you have a claim, know that that time is the time that I really hold your hand and make sure that you enjoy the services that you had been looking for from an insurance company. And to end, I will just say hi to my family, my children, and also my husband. Hi to you. I love you.
Okay, your contact information as you leave the stage.
Yeah.
Okay, my number is 0726 361 842. That's my Safaricom. My Airtel is 0785 648 728.
Okay,
Yeah.
From me, my dear viewers, is a big thank you for tuning in since we started till now. Hope you've been informed in various things other in insurance. I've also learned a thing from it. So till next time, we're going to host another guest who's going to come with an amazing topic. We'll talk about it and we'll inform you on that. But now, consider Joyce as your insurance agent. But as we wrap up the show today, a big thank you even for the media crew who made this show a big success. I know we didn't read the comments today because of our technical hitch, but next time we promise to. My name has been Caroline Muthoni. See you next time.
Okay, that's great. And as far as the comments are concerned, we shall be responding to them from your Facebook. And sorry for the technical hitch. And the topic tonight has been understanding the dynamics of insurance. I've been your host, Jeff Kimayo. Till next time, get your insurance cover. Thank you.
Do you need a motor vehicle of your choice? Find no other. Nakib Enterprises Limited is your destination. It's located along Gong Road, opposite Jamuhuri Showground, next to Toyota Kenya Company, before Rescos. For more information, you can contact us on 0798 404188 or 0713 958808 or 0797 549710. You can also email us on nakibenterprises@yahoo.com. Nakib Enterprises Limited, for all your motor vehicle needs.